It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader in less than 5 minutes per week. The video newsletter is brought to you by TradingTips.com.
Welcome to this TradingTips.com video newsletter on the Average Breadth Index, or ABI. In this episode, you'll learn how to use ABI as a complementary tool to inform your trades. Let's begin. The Average Directional Index was developed by Norman G. Fosbach, who debuted the indicator in his 1987 book, Stock Market Logic. ABI is a simple but effective statistic. For each trading day, it looks at all of the stocks on the New York Stock Exchange and subtracts the number of declining stocks from the number of advancing ones. The result is then viewed in absolute terms, so both positive and negative numbers are read as positive numbers. A different universe of stocks, such as the S&P 500, could be used instead. The idea is to measure volatility levels in the market without factoring in price direction. To reiterate, ABI is read as an absolute value, so the number is always positive. It is impossible to have a negative ABI. The lowest an ABI could be is 0, which would occur if there were an equal number of advancing and declining stocks. If there were 10 more advancing stocks than declining, or 10 more declining stocks than advancing, then ABI would be 10 either way. It is not important if there are more advancing stocks or more declining stocks. Only the discrepancy between the two is important. ABI is interpreted as measuring volatility, with high numbers predicting more future volatility and low numbers predicting future stability. In Fosbach's book, Stock Market Logic, he mentioned that high values historically have caused higher prices 3 to 12 months later. Here's an example of a chart with an ABI graph underneath. As you'll notice, the ABI increased substantially in the run-up to the stock's massive breakout. Now, the interesting thing here is the ABI did not predict the upside breakout specifically. It could have been predicting a crash. How do you know which is more likely? The answer is that you have to use ABI in conjunction with other indicators. You cannot assume that because there have been more decliners than advancers that this is a bearish sign, nor can you assume that it's bullish. ABI's creator Fosbach found no correlation between whether advancers were leading or decliners were leading and what kind of volatility this predicted, only that it did predict volatility. Be sure to keep this in mind. What are some other indicators you can use in conjunction with ABI? Well, there are dozens, and most of them have been covered in previous TradingTips.com episodes. Here is a list of 4 of the most important and easiest to use indicators and the TradingTips.com episode numbers. We looked at MACD, Moving Average Convergence Divergence, way back in TradingTips.com episode number 1. MFI, or Money Flow Index, was reviewed in episode number 7. RSI, or Relative Strength Index, was reviewed in episode number 10. And Williams Percentage R was reviewed in episode number 29. Using one or more of these indicators to determine if a stock is likely to break out to the bullish or bearish side, in conjunction with ABI to determine if the stock is likely to break out at all, is your best bet. So in summary, ABI predicts future volatility by subtracting the number of declining stocks in a universe, typically the NYSE, but sometimes the S&P 500, from the advancing stocks in that same universe. A high number predicts a large amount of future volatility over the next 3 to 12 months. A low number predicts low levels of volatility. It is important to remember that ABI is viewed as an absolute number, which means it cannot be negative. The direction of the market, or whether there are more decliners or advancers, is not important. Only the difference between the two is significant. Thus, ABI must be used as a complement to other technical or fundamental indicators to inform your trades. We hope you've enjoyed this TradingTips.com video newsletter. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. Do you want to view more Trading Tips videos? Visit tradingtips.com. Sign up for our free video newsletters. Become a successful trader by visiting tradingtips.com.